All right, welcome to yet another trading week. Well, I had to take a compulsory 5 days break. I just had to stay away, take some rest as the market volume was quite discouraging. But before the market closed for this week, or let's say last week, because we are entering a new trading week, things began to pick up. So in this review, at least we have two pairs with very clear directional bias, and of course we are going to be concentrating on those directions in this upcoming trading week. All right, first let's move into the Forex Factory economical calendar to see those high impact news announcements that are scheduled for this upcoming trading week. As you can see, the the coronavirus pandemic is still hitting hard. Even the fundamental events are nowhere to be seen. You can see for a whole week, just four high impact news announcements that will be happening. Not really much fundamental events, and when that happens, it affects market liquidity. The price volume or market volume tends to drop. Anyway, like I said earlier, we will keep following the market. The best thing you want to do is to avoid losing your money to the markets. Okay. So as Forex traders, keep all of these high impact news announcements on your notepad and ensure you are not trapped upon their release. Okay, now let's look into the charts. The first pair that we want to look into right now, just to give you a general market overview of what has been going on. You can see in the Australian dollar against the Swiss franc in the weekly time frame for how many weeks now? 1, 2, 3, 4, 5, 6, 7, 8, 9. You can see what's been going on there, and that has being the type of market volume that we have seen across most of the pairs. A very thin market volume. Nothing has really been happening. It's been quite discouraging, but then when you have this kind of thin market volume, the best thing you want to do is to completely stay out of the market, completely avoid such type of market. All right, the next one is New Zealand dollar against the Japanese yen. In fact, we took a trade here, and that trade ran for at least 3 weeks. Okay, we just closed out the trade for about plus 20 pips profit. Not really what this type of setup should offer. This type of setup should offer at least plus let's say 200 pips. Okay, that's the type of expectation that we had in this type of setups. But then you can see the very thin market volume for some weeks. See how price has remained stalled in that area. Nothing seems to be happening, so we closed the trade out outrightly. Okay, just for that small profit. And now we are still very convinced that the directional bias in this pair is to the downside, and so we are still searching for short entries if things get better and price continue to move. As you can see, that's the range. Price has remained stalled in that area. We will be happy to see price move below that level, more so that we have a trend line. Okay, a trend line running through that zone, and price is right now trading around that area. If we get a breakout, where that would be a good thing to confirm our direction, and we'll keep searching for short opportunities in that direction. Okay, so don't look for buy entries. Price is likely going to break to the downside, and of course we'll be searching for trades in that direction. The euro against the American dollar, this is the weekly time frame. Well, we had analyzed this before, as it seems we were expecting pullbacks to this area, but pullbacks might be hard because the American dollar is in serious troubles. It is really weak. We may likely see price just keep pushing to the upside, so we'll be searching for only long opportunities in this pair. We are following this very closely in the daily time frame. We had analyzed this before, where we said the 3 SMA strategy should be the best strategy to trade here. If you fire in the indicator, you will have price moving sideways in a staircase format. All right, here this was the first bounce. Sorry, let me just get that. That was the first bounce, more of a range. Okay, that was the push sideways. Now again another push, then sideways. We might get another push again to the upside. So we'll be waiting for price to break above that range, preferably as soon as the dynamic area of support in this case catches up with price somewhere around it here, we may be seeing a breakout for a continuation move. So our best directional bias is to the upside, but as you are seeing right now, the low market volume again has given this setup a staircase formation with a breakout setup. All right, the range is sideways bias where price is likely going to keep flipping up and down until the dynamic area of support and resistance catches up with it. Then we can get a breakout. So we are following that. We'll see where the breakout happens. All right, two of our most high quality setups that are developing now are coming from one is from the Australian dollar against the Canadian dollar, and from the technical look of things, it seems the Canadian dollar will be gaining some strength in the weeks to come. All right, so you need to be very careful trading against that strength bias. Now, the Australian dollar against the Canadian dollar, we're expecting to see a weak Australian dollar. All right, expecting to see a weak Australian dollar and a strong Canadian dollar. That means this pair should be coming down. So we are looking for short entries right now. Price is in the weekly time frame. Price is really not trading around the key area. It is just let's say it's a problematic zone, which of course should be acting as resistance. But in the daily time frame, let's take a look. I just want to show you something that we are following here that may not really you may not, I don't know if some of you have seen that, but for those of you who are not familiar with the shoulder pattern formation, we have one right now. Okay, it's high quality setup. You can see that shoulder right here. Okay, this one here is the head, and we have another shoulder. Okay, this area here is the neckline, and we are following price very closely around there. So I'm just going to mark this soon. It's an area. Just keep it right here. Okay, preferably I'm going to also keep this one, the linear line. Okay, now as we are following this pair, anywhere around in here is our resistance area. Anywhere around here is a very serious level to have price bounce off, then come back down. So we're looking to trade this reversal pattern of a shoulder, head, shoulder formation. For those of you who are not familiar with this, well, that is what we have in there now. If price gives us the bounce, we'll be expecting to see the first move to be in this same length. All right, from that bounce area to the downside. So some nice profit there that we are expecting in this setup. We hope the setup is not invalidated. If you want to know how we are going to get involved in this trade, then you want to join us in the signal channel. Once we find an entry, we will definitely let you know. Okay, so let's keep this high quality setup coming for us. We have an idea. Next one is the New Zealand dollar against the Canadian dollar. Again, another Canadian dollar cross. Like I said, this pair is the Canadian dollar might be gaining some strength in the weeks ahead. All right, so as you can see here, price reacted off that resistance zone. It couldn't break through, and from there on it is pushing back down. What is more interesting is in the daily time frame. You will see that a trend line has been broken. All right, that trend line in the daily time frame has given way. That means we are now looking at a highway free of traffic to the downside. We'll be waiting for price to make some pullbacks somewhere around in there, and either around the breakout point somewhere in here. Okay, around that area. If price makes a pullback to that zone, anywhere around this zone, let me see if I can give you an exact level of an area. Let's say around the 0.8792 area. 0.8792 area, right? If price makes a push to that area, from there on we'll be looking for our short entries in the New Zealand dollar against the Canadian dollar. Okay, this is a high quality setup as well. If the pullback happens, we'll be very happy to trigger the trade. Okay, all right, so don't you worry, you just need to be patient. Like the market has been in a very bad shape due to a low volume market as the coronavirus pandemic has hit the world so hard, but we are very hopeful that the future is much brighter than you can see now. So just save your money, don't trade trade recklessly. You don't want to lose your money. Just keep reduce your trade frequency. Once the chips are down and times are better, we will increase our frequency and of course make more money. Thanks again for watching. If you have questions or contributions, feel free, send them across to us and we'll be very happy to respond to them. Wishing you a profitable trading week ahead. Bye bye.